talk about a really interesting topic that, kind of, at least for me, came out of nowhere when I learned about crypto. Like I hadn't even really considered the idea of non-fungible tokens. It was just strange. So, really happy to have Tony and Amitt join me today to talk a little bit about how crypto enables non-fungible tokens and why, what are they? Why are they valuable? And maybe give us a little bit more background on that. So, just to kind of kick it off, what is a non-fungible token and why does it exist? How does it exist?
Sure. This is on. So how many people here have heard of CryptoKitties or seen CryptoKitties? Okay, good. For those that don't, it's a game it's a website game where you buy and sell and trade digital cats. And the reason this is somewhat unique is the ownership of these cats. Each one is unique, and the ownership of each individual cat is tracked on the blockchain. So even though the representation of these things is kind of like a funny-looking cartoon graphic of a cat, the underlying premise is that instead of having currency now on the blockchain, you also have stuff like goods. And so today it's digital. A lot of what we're seeing is digital items and maybe like a sword from a game or whatever. But in the future, you could see things like tickets, deeds to houses, software licenses, royalty rights, effectively anything that's again non-fungible.
And just to you might have heard about ERC 721. When we talk about non-fungible tokens today, most likely we're referring to ERC 721, which is a token standard on Ethereum. Until about late 2017, almost all tokens on Ethereum were ERC 20, which made them fungible, identical to one another. But non-fungible tokens weren't invented in 2017. Nick Szabo predicted them back in the late 90s before Bitcoin, and colored coins were an early concept on Bitcoin. So the idea of having these non-fungible tokens on the blockchain has been around as long as we've been thinking about blockchains. And it's just because of Ethereum's smart contract capabilities that we've started to see some experimentation with it.
Mm-hmm. By the way, guys, I do want to make a correction. Our spell check was very aggressive on this slide. So Tony is not the product lead for Decentralized. He's the product lead for Decentraland, which is a prominent non-fungible tokens project in the space. So I wanted to clarify that. So when we think about blockchains, we really find that they are valuable for three reasons, right? And one is censorship resistance, the other is permissionlessness, and the third is trustlessness, right? So censorship resistance, no one can stop me from moving my assets. The permissionless, no one can stop me from signing up, basically, and starting to play or starting to use them. And then the trustless, I don't need to trust anyone to maintain the ledger. Why do collectibles or non-fungible tokens, and maybe I need to separate out the collectibles as a subset of non-fungible tokens, but why do collectibles need this? Is it overkill?
So for some background, I was early at Zynga, and I worked on social games for many years, and so I'm gonna use that as an example, is if you played a game like World of Warcraft, or you played a game like Farmville, and you earned items in the game either via spending time or spending money, you didn't truly own that stuff. It was basically some bits in a database owned by Zynga or Blizzard or whoever. And if they decide that they want to shut down the servers, if they decide for some reason they lose data, or they want to deny you access to your account, you effectively have no recourse. That stuff is gone. But what's interesting is that with this idea of a public ledger and public ownership, now those items are truly in your possession. They're part of your Ethereum wallet. They're assigned to your address. So if you want to transfer it to, say, another player, they shut the servers down, you want to prop up your own website that allows people to continue playing the game, you have the capability of doing that. So it's truly decentralized ownership of stuff in that case. The other thing that we see a lot is that these companies, they'll restrict transfers. So you can't, if you buy a digital ticket on Eventbrite, you can't easily go and sell that ticket to someone else. You have to print out the physical copy and give it to someone, or if you use something like StubHub. But with an NFT-based Ticket, for example, like you can set up a third-party marketplace, which is what we run. We're running basically an eBay for NFTs or a third-party marketplace for all NFTs. You essentially have this like new second market, this new second marketplace. And one more thing is I actually think there's one more thing that you're maybe missing with why NFTs or why blockchains are great, is you actually have visibility into every transaction that occurs. So in this case, like Ticketmaster, for example, would want to actually go and issue tickets on the blockchain. And the reason why is they can make money off that first sale. And because they can control the smart contracts of how things are transferred and have visibility into every transaction that occurs on the blockchain, they can also take a percentage of every resale as well. So this sort of business model just was never possible. If I sold a physical ticket, if someone goes to sells on Craigslist and meets in a parking lot, exchanges cash for it, I can't do anything about that. But because everything is represented on the blockchain, it's all public, and I control how the transfer rules, I can actually create these brand new business models that never existed before.
So I don't want to go too far into this. I don't think you need a blockchain for that, because a database gives you that too. Like it's the permissionless access for the database.
We'll talk about that offline.
This will be a fun conversation for later.
Yeah.
I'm curious for your thoughts, specifically, maybe with regards to Decentraland and how some of the things that people are building in Decentraland.
Sure.
Like, do they really need one of these three aspects? And if so, which one, of censorship resistance or permissionless or trustless, what's actually valuable to your users?
Yeah, if you don't mind, I want to pop up for a second and then go into Decentraland. To contextualize this conversation a little bit, we've talked a lot about storing value today. So the Path to Trillions talk was about monetary store of value. Where are we going to store our money in this digital money? In the next panel, we're going to talk about securities. So blockchain-based securities, that's another way you store your value. And then things is the third one. That it might seem kind of trivial, but if you think about where value is stored today in the physical world, actually a lot of it is in things, maybe more than money. If you think about your own net worth, where is it? It's not just sitting around in cash. Probably the majority of it is in securities or some kind of investable product. And then the rest of it is in stuff, your house, your land, your car, your boats, whatever. So that's kind of how I want to talk about the size of the NFT opportunity. It's not that you can create these cool games that you couldn't create before. That's definitely part of it, but it's also potentially a place where you can store lots of value. And that ties right into the blockchain benefits. The reason why they can be valuable, and to contrast with what we saw in social games and today's digital games, is now that you can take it with you, they're not gonna, when the game shuts down, you don't lose it. Nobody can change the stats of your item. They can't change the supply of it without you knowing about it. All of these great benefits of blockchain. Now your digital items can be very valuable. You can trust that they'll accrue value, or not accrue value, but they can be valuable and perceived as valuable by others. So you can feel more confident spending more money on those things, holding those things instead of trying to exchange it for something that might be more valuable in the future. The reason why this is important for Decentraland is, so at Decentraland we're building the foundation for a open virtual world that's owned by its users. So imagine if you've seen Ready Player One or Westworld, it's kind of that idea. And the most important layer of the project is the land itself, which is, these are 10 by 10 parcels that represent land in the virtual world, and you can build virtual reality experiences on top of them. And they all sum to this kind of metaverse thing. The reason why blockchain is really important is because the benefits of blockchain are important is you're not going to invest in building your environment and your time, your money, et cetera, unless you feel you have a strong guarantee that nobody's going to take it away from you, change the position of it, change the properties of it, all of that kind of stuff. And this really rhymes with the same challenges that developers have building on top of other people's platforms today. You'll be hard-pressed to find a VC that's excited to invest in somebody that's building an app that solely lives on top of Facebook or Twitter. And that's just because there's a long history of platforms changing the rules and completely crushing businesses. So it's absolutely critical for us to have those benefits of blockchain at the base layer of Decentraland.
Yeah, that makes a lot of sense. And I think it can be helpful to try and split out now the various categories of these non-fungible tokens, right? We've all kind of talked about CryptoKitties, and I actually think we brought it up at least 10 different times on different panels so far today. And so CryptoKitties is just one example. It's an interesting game. actually, I tried it. It wasn't that much fun. It was, I thought I didn't get it. I saw people using it, but what other kind of examples can you think of non-fungible tokens that that you think will capture value or will actually become larger than they are now?
We're starting to see more things like rare art, like digital art. That's like the idea of scarcity is really interesting, but I think that if you think about like physical goods and digital goods, it's like not either or. It can be like a spectrum as well. Mm-hmm. So the example I have is like if Beyonce went and released like 10 backstage passes as Ethereum non-fungible tokens, how many millions of people do you think would go and sign up and figure out how to acquire those things, right? So I think there's a pretty wide gap between digital cats and something that has very clear offline real world value. And so there are projects working on like licenses, like this idea that if I buy a movie on iTunes, why can't I resell it, right? If I buy a game on Steam, why can't I resell it and have it in a way where it's actually beneficial to the end publisher, have all parties be aligned. And so as we're thinking about I actually think that game items and collectibles are a pretty great beachhead category. And as we start to have more, it's not even about product development in this case. It's about market development and having people become familiar with owning things on the blockchain. And once they're comfortable with that, we can start expanding the types of goods that we're offering on it. So.
Yeah, I don't really have much to add. That was great.
Yeah, I think you had given some examples though earlier of things that we store our asset in. So it seems like one of the things I interpreted from your statement was basically that we'll tokenize the ownership of those things. So you're mentioning like houses and boats and cars, et cetera. So if those are physical items, why does it make sense to tokenize the ownership?
I actually am very skeptical of NFTs representing ownership of physical items because of the enforcement problem. Until law enforcement agrees that your token means that you own that house or that painting, it's kind of hard. Mm-hmm. And there are I had a conversation with somebody the other day about launching items into space and then that you just use the digital version but then you don't get to use it. So it's like a moot point. I think we're really far off from the physical tokenization of stuff. But my one version of the future I can imagine is that we continue spending more time in digital places and continue investing more of our time and resources into those digital spaces, whether they're virtual worlds like what we're building at Decentraland or Telegram groups or whatever. Just anything where the people, the interaction, the stuff inside of it is completely digital, non-fungible tokens are a great solution there. Mm-hmm. And if you want to get really crazy, really anything that's not fungible, an NFT could be a good use for. I'm really excited to see all the experimentation there, but I'm fairly convinced that just as you can use blockchain for tons of stuff, but we tend to focus on where is value going to be stored, it's going to be the digital goods where people feel excited to store their value are going to be the areas to look out for.
Mm-hmm. So along that same line, do you think that most of the use cases for non-fungible tokens will be these kind of crypto native use cases where it wasn't something that people were doing before? Or do you think more of the adoption is going to come from this offline to online bridge where maybe I'm tracking ownership of rare art or tracking ownership of other interesting assets that are non-fungible?
I think I think the beachhead category is going to be digital just because it's the easiest thing. It's the easiest. The offline stuff is interesting because it's more of a BD problem than it is anything else. So if for example, say we sell a collectible, like a Stan Lee collectible at Comic-Con, mm-hmm. and it gets you an autograph session with them. You can go redeem it at Comic-Con for an autograph session with them. That's a business development problem more than is a technological problem. But the market for that that's been created on the blockchain that's the new thing, right? Before, like that, if you were handing out physical like golden tickets, like that market would have existed offline. So what's really, the way that I like to think about it is like, before we had, like digital goods were inherently limited before, and now we're actually bringing them closer to physical, like the properties of physical goods. And so, a lot of that like kind of gap, that like online to offline gap is going to have to be, it's more about like, it's more about the, about the business, the BD side of it than anything technological. That being said, I do think that there is a couple cases where offline, the tokenization of offline assets makes sense. Anything that's hard to move around. So for example, like if you have like a rare antique car and it's hard to move around, or you have like a piece of art and it's hard to move around. And I would love if any of you see a business where someone is actually doing custodianship of that stuff and exchanging it for tokens, like we would want to talk to them immediately, because I think that's actually a really interesting use case that maybe hasn't been started yet. And this is how art's traded anyways, is that like, a lot of times people are just exchanging slips of paper, and eventually someone's like, I want to go display this in the gallery, I'll go exchange the slip of paper for the physical good. Why can't we do that with tokens? There's no reason why we couldn't do that. But there is that whole problem of like, of that like safeguard of like, if I lose my token or I lose my slip of paper, someone's going to step in and actually, provide me with some sort of safeguard against that. But so there's a lot of infrastructure that still needs to be built in that case.
But why is that better on tokens? Like, so let's use the art example, right? Is it just like is it the divisibility? Because we can do that. Like to go back to the first question that I asked, and this is the main question that I keep on asking myself about non-fungible tokens is, other than the crypto native use cases, like why is this better, or like for which offline to online cases, like does this actually add value versus like, are we using blockchain because like, we can and it's cool, but like at the end of the day, like if I turn in my slip of paper or if I turn in a token in order to redeem the painting, right? Like, well, turns out it is centralized because like there's the company that is storing my painting and they can choose to honor that paper or that token or not.
Yeah, well, as a developer, I'll say it's the idea of programmability of it is really interesting. So like I could take that token, create a smart contract that then tokenizes it and basically do that in like a weekend, right? And now I have fractional ownership of this thing, which before had to maybe go through like certain legal channels or whatever to do. So there is like just the ability to like start being really creative what we're doing with these digital assets. I mean, the whole like, this is just, we're going to circle the drain on this like database versus blockchain question, right? But like, effectively, it's like a lot of the properties that make the blockchain, great for currency also really apply to NFTs. Like I can hold like you start to get into like this idea of a post-ownership society as well. Like I think Set is a really good example of a company that's doing that. It's like Set's basically they're creating like an index contract. You put a bunch of stuff into it and they pop out like ERC20 tokens.
Oh yes, yeah.
Right. So there's no reason you couldn't do that with things too, right? So now I put my house into a smart contract, and now I have tokenized my house, and that's 40% of my house is owned by investors or whatever. I can sell it brick by brick, whereas before that wasn't really possible. So that's one possible thing.
Okay. So I think maybe focusing a little bit more on the Decentraland side here. Decentraland to me is one of those very crypto native use cases, and something that I've been thinking about a lot is I've been talking with some friends who invest in virtual reality. I've played with a lot of different virtual reality assets, and something that I realize is people like to express themselves through ownership of fashion, of cars, of houses, etc. People like to express themselves by having unique things, right? So how do you see this interplay of having these unique tokens with potentially like a VR reality, and then to go a step further, like how do you expect that to evolve? Like how do we get from here to that ultimate vision of the future where something like Decentraland is fully built out and really working?
Yeah. First, maybe let's talk about what makes a collectible item valuable. Especially in digital, it's largely sociological. It doesn't meet a need of yours whatsoever because it's completely digital. So the reason you find it valuable is because other people also find it valuable. It's kind of like money, it's a shared illusion. And when you want this collectible because it signifies that you belong in some kind of group or you have some certain status within that group. And that drives a lot of this behavior, and we've seen it time and time again across games and online communities and all this kind of stuff. So when we think about NFTs and crypto today, there's a bit of, if you follow this space, you can see huge surge of speculation once a new thing launches, and then the usage kind of dies down because there's nowhere to really show them off yet. Amitt mentioned this is, he's calling it what
the trophy room problem.
Yeah, the trophy room problem, which means like if a collectible sits in my wallet but nobody sees it, does it really exist?
Yep.
And that's part of what that we're offering one version of that. You can bring in all of your NFTs and show them off in a world, and that should drive value of these NFTs. There are lots of other ways to do it too. Better games with more players. It could even be like online to offline. Maybe you can show your cats on your iWatch or whatever it is. But the core thing that's missing is there's no community around these collectibles yet. So I think there are many paths to adoption, but a way to think about it is NFTs integrated into non-crypto native platforms like World of Warcraft or Facebook or whatever. And then the other is crypto native, which is like Decentraland, or even an exchange could be an example of that. I think it will be personally, other people disagree with me, but I personally think it'll be a long time before a non-crypto native platform is excited to bring NFTs on, because there's a direct disincentive for them to bring on NFTs onto their platforms, because all of the control they have over their digital items today is a cash machine. It's amazing. So we'll see experiments from incumbents creating crypto native complements to their product suites, like maybe a card game with NFTs. But I think we'll primarily want to see the early adoption coming from crypto native places where there's high incentive to support visualizations of all different types of NFTs, not just the ones that you create, and all of the like programmability and the payments and all that kind of stuff is built right in.
Mm-hmm. So putting my investor hat on for a second, these non-fungible tokens make sense, and I see the vision for having non-fungible tokens, but let's say I don't want to really pick collectibles. Maybe I'm not good at it. Maybe that's not my core competency. How do protocols kind of capture value in a world of non-fungible tokens?
I was hoping you guys would write something about this. You can theorize that because value is stored in these collectibles, that the underlying network should also be valuable, but I don't have a very strong mental model on how to think about that, so if anybody here does, I would love to hear it. And interoperability messes with this as well. I mean, I think just some context on how their NFTs are created today from a technical perspective. You have a smart contract that uses the ERC 721 token standard, and then all of the ownership of those items live in that contract, basically. There's mapping of Ethereum addresses to the items that they own, which are represented as IDs in that contract. So a way to think about this is similar to what Ali was talking about with the trade-offs in the n-dimensional space. I mean, it would stand to reason that you would want your digital collectibles that you're storing value in to be on the most secure, most decentralized protocol. But I don't know. So yeah, I'm curious what you think and what everybody thinks about this.
I mean, we're built on top of Ethereum, and our view on it is, in an ideal world, like we wouldn't even mention that we were on Ethereum on the end site. Like the way that we think about it is that this is just, it is like a fancier database layer, right? That enables peer-to-peer transactions, but I think that from our perspective, if we do our job, we'll get millions of people transacting on Ethereum. And if you hold Ethereum, that's valuable for you as an Ethereum holder, right? So I think there's two ways. One is that there's the underlying kind of blockchain protocol layer. I think there's a one layer above that, which maybe isn't as obvious, is that like if you control the smart contract layer and you control like how these things are getting minted and how they're being transacted, there's another layer of value capture right there that doesn't necessarily have to be in the form of a token. It could be in the form of just like taking a percentage of transactions that occur on your platform, which is actually our business model. So like if you were to say, I don't want to pick collectibles, well then, if you just want to bet on the fact that people are going to buy and own and transact stuff, you should either invest in Ethereum or invest in a company like us.
Or Decentraland?
Or Decentraland. Decentraland is also, I mean, you guys are basically a verticalized version of the same thing, right? So,
on that kind of same note, going one level deeper on it, what makes these things actually unique? Because you were talking about the smart contract that manages this and kind of how it works from a technical basis, right? So let me give an example, right? Like let's say I own some CryptoKitties, right? And that's managed by one smart contract, but that smart contract is all open. So can I just go and copy that smart contract and like have that same CryptoKitty, but it's like, it's not the same CryptoKitty, but it's just exactly identical in almost every single way? And how does that end up impacting, some of your businesses? Because like obviously on the exchange side, like that's going to be really relevant. And how do you choose like who's the real CryptoKitty? Like,
so I mean like if you've collected trading cards before, like baseball cards, like what's stopping someone from going and taking a printer and printing out the exact same image, right? So like the idea of like authenticity and like certification that like this is truly like this is truly like the authentic item. On the code side, it's like, yeah, someone could go and copy CryptoKitties and fork the ownership table and basically say like, copy every part about it. But then it comes down to the customer relationship, right? So like I saw the panel earlier about like dApps, and it truly is about the customer relationship. So like if you go to CryptoKitties.com, they're using one smart contract, and that is, very quickly there's new transactions that are occurring using that smart contract. And any site that's trying to like copy or fork it or whatever is going to have a really hard time of it because the players have a relationship with CryptoKitties.com, right? And so, if we were to just get slightly more technical, like all of this stuff is also encoded on the blockchain. So like one of the things that, we launched recently is we're partnering with like Twitch streamers and Instagram celebrities and so on to release like digital collectibles of their own, of themselves. And we're having them verify like that, like, based on, the when they signed up and so on, like we can actually have a chain of custody of like this person who says that they're selling this collectible of themselves actually signed up on this date, and here's the transaction in the blockchain saying so. And you have that chain of proof that you can use to basically verify the authenticity of something. So at the end of the day, it's just numbers in a database, but it's everything around that number that gives it its value.
Okay, that makes a lot of sense. So you're using some of the inherent properties of blockchain to verify authenticity.
Yes. And scarcity too. Right? Also scarcity as well. You can say like you can actually put in the contract that you're never going to issue more than like 3 of these, and you can verify that as a user, which is interesting because you can't actually do that with offline goods. Like I can't guarantee that like if Magic the Gathering says they're going to release a very unique card and they're only going to release 5 of them, that they actually only released 5 of them.
And authenticity is socially decided. So in the academic literature on collecting and collectibles, brand is studied extensively. And like if you ever collected Beanie Babies like I did, there were a lot of companies that tried to create Beanie Baby clones. Any collectible has tons of clones, but the second version of it is worth an order of magnitude less because consumers are savvy and decide together which one's authentic. You might argue on blockchain, it's like literally the same, like the bits, the representation, the smart contract, everything's literally the same. But I believe that users will still together decide like which one is the main chain. Like you see it with protocol forks too, and it'll be a big difference.
Yep, perfect. That concludes the core part of the panel, but want to open it up for audience questions here. I'll let Miles choose.
Was there an attempt, I did not check, to clone CryptoKitties? Because that's very interesting. Like, would a pure clone of CryptoKitty work? Because it's the same kitties, as you said. So as an investor, like it's kind of scary, no? Like because we don't know yet. If the clone gets bigger than the original, what happens?
So we saw like dozens and dozens, literally people taking the CryptoKitty source code and copying it over. I mean, in their case, they still have like copyright protections on like the art and the underlying representation of this. So there actually is IP protection still, and you can use that to your benefit. But you know, I still stand by the fact that like it comes down to customer relationship, and if you own the customer relationship, like it doesn't matter how many clones there are. It's really hard to move community. It's easy to fork code, but hard to fork community.
Actually, that reminds me of a point on investability. Like, what if I don't want to collect things? Brand is super important in collectibles off of blockchain. So maybe watch out for brands that are establishing like huge trust and value with their users, because they can issue multiple sets of collectibles. And I think there will be some huge winners that are just brands that make very desirable goods.
How do you guys think about the risk of, right, so the database itself is open, and so anyone can build a UI on top of it that interacts with that. And so it seems very easy for people to manipulate, right, like if this cryptographic blob represents this cat and that other cryptographic blob represents another cat, and then someone else just comes and puts a new UI on top of all of it and says, no, the cats are reversed, right? Like does that destroy value or create value? That's not clear. And then the kind of second question from that is, are there any empirical examples thus far of people who basically you have a single game and it's a single database, but there's just multiple UIs that are like collectively collaborating on the same database?
Yeah, so CryptoKitties is, I guess, the canonical example for everything. But we have a representation of CryptoKitties in Decentraland as a test. So our CryptoKitties are three-dimensional and have like idle animations. So that's completely different from the CryptoKitties that are on their site. And lots of other people are going to integrate them, like the CryptoKitty racing game, and there's a battle dome that somebody wants to build on Decentraland where you can fight your kitties to the death. And I think that this is a like kind of adjacent problem, which is like in an interoperable, when all of these tokens are interoperable, you can do whatever you want with them. So if somebody, like to your point, Kyle, if somebody takes your beautiful painting and renders it as a pile of poop, like that's not great, but is that a huge risk? Because I think what, kind of on the branding thing, the users will decide like what is the source of truth of the representation of that. And so the attack is like where 51% of users decide that another representation is actually the real one. Mm-hmm. Until that happens, then I think like it's not a major risk for the value of a given collectible.
Does this actually present an interesting centralization risk, though? Because like I'm dependent on the CryptoKitties website?
Yes, it does.
Okay.
But it's weird because it's still less centralized than it used to be with traditional games. So I actually view this as a feature, not a bug, that someone could take your representation and do something else with it. Like the way you think about it is like, you know, if I own a deck of cards, like I can play a dozen different games with it, and like that actually enables, like, it actually popularized that format. So like, you know, if you were to talk to the CryptoKitties guys, I mean, they would be the first ones to tell you that the ecosystem is incredibly important and actually what drives more value. Because like the more people are doing with their cats, the more cats they sell, right? And then like establishes that the cat as like a form of like it's almost like a platform. And so like I think that really savvy developers are going to try to find ways of actually incentivizing third parties to do more with their non-fungible tokens, because it actually just helps establish them as a staying brand or a standard.
Mm-hmm. No other audience questions. Okay, so let's go a little bit deeper on this, because I think this is fascinating topic. So it seems like your opinion is the opposite of someone like promoting the protocol is just apathy. So actually having someone go in and like go to the trouble of reversing your cats, like in Kyle's example, or creating new interfaces to interact with them is actually better. Am I interpreting that correctly?
Yeah, it's like, because basically what you're doing is you're effectively, so you said earlier that CryptoKitties, you didn't find that fun, right? Yeah. It's because the gameplay mechanics are actually really simple.
Yeah.
But if someone goes and adds more utility on top of your existing assets, like, you know, it actually helps you because now there's, you know, it increases the utility value of your underlying NFTs. So I think that like, and the thing is, we would actually try to do this at Zynga, but it was like a lot of work to do so. But the blockchain makes it super easy because it's all public ownership.
I would add that this particular problem is a symptom of where we are today, and it doesn't necessarily have to be this way in the future. You can imagine your NFT, the way you represent your NFT being also part of the smart contract. So what it looks like is established in the contract, so there's no confusion about like what is the correct way to represent it. It's not economical today on Ethereum, but it's certainly possible that you would reference like a hashed version of an image or a video or whatever, and have it point directly to it.
But you're telling me that you wouldn't be ecstatic if someone wrote a 2D renderer for Decentraland?
I love it. I'm just saying, like, there is also, this isn't the way it has to be.
Sure.
You could also, in some cases, if you really want to protect it or provide a strong opinion on what it should be like, you could potentially do it. Right now, we have this, like, half centralized, half totally open way of displaying what the collectibles look like.
Yeah. I also believe in the market to like, at the end of the day, like you have to convince customers to use like, if you're giving them like, you know, a garbage rendering of a cat, like there's no real incentive as a customer to use that. I think it's so hard to get people to do anything and do it more than once that like, at the end of the day, you have to think about aligning yourself with your customers and providing value. And so I think
like, do they have fun? Do they like it?
Exactly, yeah.
Right. Yeah, that's great.
From a technical perspective, you know, I feel like you kind of, when you painted the space, you have on one end, you have real-world assets that are going to tokenize, and you have crypto-native assets like Decentraland. To me, there seems to be something kind of in the middle, which is a digitally native asset, maybe not a crypto-native asset. And you know, how difficult is it to bolt on tokenized ownership to a digital asset? So, like, you know, it exists a World of Warcraft character to be able to tokenize that potentially. I think that the obstacle would be you need the creators of that game on board. What's the opportunity to be able to do that without, you know, you know, allowing users to do that in a self-solver?
I think it works in one direction and not the other. So if you start with NFTs and then put those items into non-crypto games, that works because what you care about is the censorship resistance and all of these great benefits of blockchain. The other direction doesn't work as well. If your issuance is in a database somewhere and ownership is aligned in a database, but you also add a smart contract that is supposed to reflect that I don't think it works in that direction.
It comes down to transferability of assets. So if I have some way of taking something that was in a database and like basically finding a way to change that database pointer to a different user, I could do it. The most common way that people would do with World of Warcraft, for example, is they would use the in-game trading system. And you'd have to literally like go in the game and Opskins is actually, there's a Wax protocol, maybe some of you've heard of it. They've basically created a way of doing that within like a blockchain context. The other way that people would do it is you instead of tokenizing the individual items, you tokenize an account, and you basically can like put the password for that account like on the blockchain, and then when someone buys it, they can actually see the login details, and that's potentially one way of doing it. These are all hacks at the end of the day, like, but it comes down to if you have free transferability of a digital asset, you can tokenize it.